Right, so this is the series 3 of the MCQ discussion, right, of all the different MCQs which have been released by ICAI. Right, so right now I'm going to discuss the MCQs which are there in the mock test paper of March 2019. Right, so again the source of these MCQs would be the institute. You go to the students, the Board of Studies knowledge portal. Right, then in the Board of Studies knowledge portal you come to the new course, right, under that the new scheme, the final course, Advanced Auditing Professional Ethics. There the mock test paper and the series 1 we are discussing the questions, right, and the series 1 we are discussing the questions. So which MCQs are we discussing right now? Mock test paper 1, final new course group 1, but obviously these MCQs are relevant for the old course also, Advanced Auditing and Professional Ethics. Okay, so test series March 2019. Okay, right. So let's start seeing each one of them one by one. Yes, question number 1 to 10 carry 1 mark each, and then question number 11 to 20 carry 2 mark each. Okay. One of your audit team members has recently qualified as a chartered accountant and joined your team to audit a portfolio of audit clients who are private companies. One of the clients, Surrey Private Limited, is a hotel in the small town near Jaipur. The revenue generated for the current year ended is rupees 10.5 crore and the entity is not a holding or a subsidiary of any public company. The owner of the business, Mr. Hazelwood, runs his family business for last 10 years. Your team member is keen to know whether Surrey Private Limited is required to comment on the matters prescribed under CARO. Which of your explanation to him are correct? Right, so whether CARO reporting would be required in case of Surrey company. Right, whether CARO reporting would be required in Surrey Private Limited. So now, what does the applicability say? Shall not apply to every company, including a foreign company, except a private limited company not being a holding or a subsidiary of a public company and having paid up capital and reserves and surplus not exceeding 1 crore as on the balance sheet date, and total borrowings from banks or financial institutions not exceeding 1 crore at any point of time during the financial year, and total revenue as disclosed in Schedule 3, including revenue from discontinuing operations not exceeding 10 crore during the financial year. Right, so up to 1 crore, 1 crore, 10 crore, if all these three numbers are within the limits, then CARO not applicable to a private company. But in this question, how much is the revenue? 10.5 crore, which is exceeding the limit of 10 crore. So hence CARO would be applicable. This we've already analyzed before seeing the options. Okay, the entity's revenue exceeds rupees 10 crore, hence no need to report on the matters. Reverse, because it exceeds 10 crore, we have to report on the matter. The entity is not a subsidiary or a holding of any public company, hence no need to comment. So then though if it is a holding or subsidiary of a public company, then irrespective of the limits we always report on CARO. Right, so A no, B no. Right, the entity's revenue for the year is 10.5 crore, which exceeds the limit of 10 crore. Hence, the entity has to provide the comments on the matters prescribed under CARO. Yes, and the last one, the entity is not a holding or a subsidiary of any public company, and hence there is a need to comment on the matters prescribed. It's a filler, right? So the correct option is C. Next one. Prakash Limited has around 25 branches, and all the branch offices were on company's own land and building. Company has the policy that all the original title deeds for land and building owned by the company will be kept in the custody of an authorized official at the company's head office, and a certified copy of the same is kept with the respective branch for verification. You have been appointed as the internal auditor for the branches of the company, and during the course of audit you observed that the original title deeds of some of the branch office are kept in the branch under the custody of the branch officials itself. Under whose custody they should be kept? Authorized official at company's head office and a certified copy at the branch. But here what is happening? The original itself is kept at the branch office. What action will you take in such a case? Right, so it is not a material discrepancy, so the auditor is not required to take any action in such a case. No. The auditor should inform the internal auditor of the HO for the compliance of the same. Right, the auditor should ask the branch official or branch office official to send the original title deed to the authorized official at HO of the company immediately and submit the internal audit report once the confirmation is received from HO of the company. So you will ensure that the procedure is followed. As an internal auditor, report the matter in the internal audit report and check for the compliance of the same in the next audit period. Right, so this is obviously a finding for the auditor which he should mention in his internal audit report. Right, you can't wait for them to send it to HO and get a confirmation and then you put it. No, that is not possible. Right, you inform the internal auditor of HO, that is also not right. Right, so D. Next one. Hi Limited is a public limited company engaged in the manufacturing of watches. The company appointed CA Ishan as statutory auditor for 1819. On verification of the composition of the BOD of the company, the auditor observed that during the reporting period in one of the board meetings, the chairman was non-executive director and less than 1/3 of the board comprises independent directors. The auditor wants to examine the effect of the changes in the composition of the board and or its chairman and its impact on the compliance throughout the reporting period. So at least by this time SEBI LODR comes to your mind. But the management restricts the auditor from examining the same whether the auditor has right to examine the effect of changes in composition of the board. Right, so will the auditor check the composition of the board and changes in the composition? Yes. Right, that's one part in the SEBI LODR. The auditor has no right to verify the composition of the board and examine the effect of changes in the composition since it is not related with preparation of financial statements. No. The auditor should verify the composition of the board and examine its impact on compliance throughout the reporting period as a part of certifying compliance with the requirements of corporate governance. The Management Act is void as the auditor is appointed by BOD only, so the auditor should necessarily verify the composition of the board and its impact on compliance. Since Hi Limited is a public limited company, its board composition has to be compulsorily verified by the auditor. No. Right, so the correct answer is SEBI LODR, that you need to check the compliance with the code and also certify either the auditor or the company secretary. Right, next one. Following are the registered persons under GSTR Act 2017. Which one of the registered person is required to get his accounts audited and also furnish a copy of the audited annual accounts and a reconciliation statement duly certified in form GSTR 9C? Right, so now they are saying which registered persons are required to file GSTR 9C whose aggregate turnover exceeds 2 crore. Right, Mr. A is an advocate whose turnover for the year is 1.25 crore, so not exceeding 2 crore. Mr. B is a labor contractor managing construction service and his turnover is 3.95 crore. D is a pediatric surgeon who has newly set up his practice in Pune. He paid an amount of 10.5 lakh as taxes in the current year. Right, so newly set up his practice has paid an amount of 10.5 lakh. Right, so 10.5 lakh, will that come to 2 crore again? Right, as taxes, and who is an architect has paid taxes of 22.5 lakh in the current year. So is it based on the quantum of taxes that GSTR 9C is required to be filed? No. So again these 2 points are not valid. So that 2 crore. Right, so the correct answer over here is B. Right, next one. As an auditor appointed under section 44AB of the Income Tax Act. Okay, so one GST question, now one tax audit question. Under which clause of Form 3CD will you report for amounts deemed to be profits and gains under 32, 33, 33 ABA and 33 AC? Right, so clause 24, 40, 31 and the 23. Right, what is clause 23? It is regarding the payments to the related parties. Right, 31 is regarding the loan accepted or repaid of more than 20,000 other than by account, pay, check or draft, or single event or occasion more than 2 lakh payment or received other than by check or trace, other than cash or other than by check or draft, or if it's a check or draft, other than by account, pay, check or draft. Clause 40 is regarding the accounting ratios in Form 3CD. Right, so this is accounting ratios, this is loan accepted or repaid, this is payments to related party. Right, so obviously what is the correct answer? Clause 24. Right, clause 24, A is the correct answer. Right, these three, no. Next one. Bajaj Allianz Insurance Limited agreed to insure a large commercial client. Due to the size of this client's operations, there is a potential that it could suffer a substantial loss. It would be financially difficult for Bajaj Allianz to pay the entire claim itself. To spread this risk, Bajaj Allianz contacted Bharti AXA General Insurance to request that it cover a portion of the risk. Bharti AXA General Insurance agreed, but only on the condition that it receive a portion of the premium of the client has paid to Bajaj Allianz in General Insurance Limited. The term that best describes this scenario is retention, reinsurance, loading and casualty insurance, right? So this is reinsurance, right? This is reinsurance, right? So that is 6. That is B. Next one, an audit firm is the subject of peer review, right? So peer review is conducted of an audit firm. Please indicate the maximum number of years in the review cycle, right? So when the reviewer comes for doing the peer review at the practice unit, maximum how many years, past 5 years files can he check during the course of peer review? 1, 2, 3, 5 years, right? 3 years, right? He can check files up to last 3 years. Okay. In case of public sector undertaking, direct reporting engagement does not include, right? So if you look at that heading in the chapter of PSUs, which talks about the basic elements of PSU audit, right? 3 parties, the auditor, the responsible party and the intended users. Then you have the subject matter, the criteria and the subject matter information and the types of engagement, whether it is a attestation engagement or a direct reporting engagement. Right, so direct reporting engagement does not include, right? So performance audit, compliance audit, financial audit, comprehensive audit, right? So what did I tell you? Types of engagement, attestation engagement or a direct reporting engagement, right? In financial audit, we express an opinion on the true and fair view. So that's an attestation engagement. Right, so that's not a direct reporting engagement, right? So all these other 3, performance audit and efficiency, economy, effectiveness, then compliance audit where you check the subject matter against the criteria, and comprehensive audit where again you are checking the efficiency, economy, effectiveness, right? Similar to performance audit. Okay, right, so that is why the answer direct reporting engagement does not include the financial audit. Why? Because financial audit is an attestation engagement. Right, next one, deposit insurance facility of deposit insurance and the credit guarantee commission, that is the DICGC. Deposit insurance facility is, so DICGC facility is available, not available to depositors of NBFCs, available to depositors of NBFCs, available to depositors of bank, not available to depositors of both NBFCs and the banks. Right, so DICGC facility is not available to the depositors of the NBFCs. Right, for bank available to the depositors of the bank, yes, it is available to the bank, but not available to the depositors of the NBFCs. Right, so this is a concept-based question. Okay, next one, question number 10. Sunil was a member of Bombay Stock Exchange from 2004 and was conducting the business in securities from his proprietorship firm. During the year, his firm conducted the business of securities for 30 days with income of 2 lakh only. SEBI sent a letter to the firm for getting the accounts audited for 17-18, but as per Sunil, it was not necessary to get the firm's accounts audited as the firm was not an active business of securities during the year. Do you think that Mr. Sunil was right as per the government notification on securities contract rule? Right, so as per the stockbroker audit, which members of the stock exchange are required to get their accounts audited? Any active member. And when are you considered to be an active member of the stock exchange? Even though if you do even one trading activity, and here he is done for 30 days. Okay, even a single trade. Mr. Sunil took a right decision as it is not necessary for the proprietary firm. Ouch. As per the government notification issued in 1984, a member of the stock exchange is considered active for the purpose of audit even if he has conducted the business in securities even for a single day in the year, and he shall get his accounts audited if it is required by SEBI. As if it is required, Sunil cannot be considered as an active member as he has not conducted the business in securities for 180 days or more. As during the year the firm's income from conducting the business in securities is less than 5 lakh, the firm is not required to get the accounts audited. There is no concept of 5 lakh, no concept of 180 days, there is a concept of even a single day. Right, so the correct option over here is B. Next one, so now coming to the 2 mark one. XY and Company is a chartered accountant firm with 2 partners, X and Y. The firm was appointed auditor for 35 companies in 2017 and X having signed total 19 audits in his name. right? So 2 partners, total 35 audits. What they can accept is 40, right? And 1 partner out of that is signing the 19. Right. Y was also a partner. Y was also a partner in EFY and company. So Y is also a partner in another company where he was appointed auditor in 4 companies. Right. So Y here he is doing how many audits in XY and company? 16, because 19 plus 16 will make it 35. Right. Another company is doing 4. So 16 plus 4. So Y ka limit of 20 is exhausted. Okay, now on 4th August, X met with an accident and died. The firm was reconstituted with Y as the proprietor of the new firm and the audits of the new firm reduced to 16. So now only Y audits remaining. The new firm in which Y is the proprietor accepted the audit of a private limited company having paid up capital of 52 crore on 30th August. Okay, so now the limits ceiling on the number of audits. How many audits? 141 3G. CA is in full-time employment elsewhere or exceeded the ceiling limit of 20 audits per person, excluding the audits of one-person company, smaller company, dormant companies and the private companies having paid up share capital of less than 100 crore. Here how much is the paid up capital? 52 crore. So is it to be counted while calculating the ceiling limit of 20 audits per person? Is it to be counted? No. EFY and company, another CA contended that Y cannot accept the audit as he has already crossed the ceiling of 20 company audits in that year. Do you think that EF and company's claim is valid? It's valid as he has already been appointed as an auditor for 2016 in the reconstituted firm and 4 in EFY. Y cannot accept the audit in the year in which there is a change in the constitution of the firm. What are you saying? Y can accept the audit as the ceiling of 20 company audits is applicable for each firm in which the CA is a partner. Again, what are you saying? EF and company's claim is void as the ceiling of 20 company audits doesn't include audit of private companies having paid up capital of less than 100 crore. Right? So this is, you are saying it right now. Okay, so D is the correct answer. Next one. Brown Limited is a holding company with 2 subsidiaries, black and white. You have been given the task of covering the valuation of the non-current tangible assets in the consolidated financial statements. You note that Black and Brown adopt straight line method of depreciation for its assets, whereas White Limited, right? So Black Limited and Brown Limited, these 2 are following the straight line method, right? These 2 are following the straight line method. Right, straight line method. Right, whereas White Limited follows the WDV written down method for calculating the depreciation. So they are following the WDV method. Which of the following adjustment should be considered as correct in respect of the consolidated financial statements preparation? Right, so holding company SLM, 1 subsidiary SLM, 1 subsidiary WDV. White Limited is required to depreciate the assets adopting straight line method, which is the method adopted by the holding company. Brown Limited is required to make suitable adjustments as to the depreciation charged by White Limited at the time of consolidation. Brown and Black are required to depreciate the assets adopting written down value as to facilitate the harmonization of accounting policies. So Brown and Black should change, completely incorrect. No adjustment is required as there can be different methods of calculating depreciation for its assets for the group companies. Right, so this is the correct, which more appropriately represents the true and fair position. Accordingly, the depreciation method can be selected. Right, so under the Ind AS it says a different method of charging depreciation is just a different estimate and not a different accounting policy. Right, next one, question number 13. Management of HFC Limited noticed a sudden increase in the expense under the head wages and salaries for 15-16 and 16-17. The management felt a need to get the management audit done in order to identify the reason for the sudden increase. Arsh Gupta, CA, was appointed as management auditor by the company on 15th April. The full variety covered in one MCQ set. What areas do you think the auditor needs to examine, verify for the purpose? So increase in salary, wages, expenditure, management auditor appointed, what area should be looked into? check the payroll sheet prepared as per the approved pay and allowances, verify the overtime sanctioned and authorized, verify the payment process followed by the company for payment of wages and salaries to employee. Overtime authorized and the payment done to employees are the main areas needs to be verified. Auditor should first understand the HR policy, then verify all the authorized voucher for overtime payment, verify the payroll preparation and reconcile the gross pay in terms of increment, promotion, resignation, verify the appointment made during the year as per the HR policy and payments made to agencies providing the contractual staff. Auditor needs to verify the new appointment, that is company's payroll or outsourced staff, and the overtime allowance paid to employees. Right? So obviously all of it is required to be considered. You are a management auditor. See, the A, B and D is talking about selective checking, which is not right. Right? So C is the correct option. Right. Next one. Yes, are you paying attention? Okay, you're revising it again if you've already seen these MCQ. Okay. An educational institution was collecting fees from their student by cash, check, draft and through net banking. Institute follows the policy to account for the fees received in the year of receipt only and for the checks or drafts received but not deposited in bank or credited in bank account should be shown in the reconciliation statement. The internal auditor of the branches noticed that at some branches only the fees received up to 25th of March are accounted in the same year and after that date are forwarded to be accounted for in the next financial year. The fees collected in these branches between 25th to 31st March amount to 15 lakh and the collection for the financial year is around 115 crore. The auditor was of the view that it will not give a true and fair view of the institute's revenue for the year. What do you think should be the next step of the auditor? Right, the branches have accounted for these receipts in the next financial year, so the auditor can ignore the observation. No, when we get something, we just can't ignore it that way. Auditor should report the matter in the executive summary paragraph and highlight it as a significant internal control lapse could be thought of. Internal auditor can discuss the matter with the management to take a strict action against the branches not following the institute's policy. You can't just discuss a matter, okay? An auditor should get the accounts modified and report the matter in the action taken report, right? Because 25th of March they cannot, they have to take the cutoff on 31st of March. So one, it says put it in the executive summary and highlight it as a significant internal control lapse. Right, or auditor should get the accounts modified and report the matter in the action taken report. Right, so you should tell them that don't take cutoff of 25th, take the cutoff of 31st, and accordingly he will say that I told them to do this. So action taken report. Next one. Right, AFM Coaching Institute was accepting fees from its students in cash or check or online transfer for an amount of up to 10,000, and if the amount of fees is above 10,000 by check or online transfer only. In the year 17, the institute's total fee collection was 82 crore. Your firm has been appointed as the internal auditor by the institute, and during the verification of the vouchers for fee receipts, you notice that cash receipts of approximately 5 lakh were directly credited in the bank account instead of routing them through the cash account. Management explains that since the deposit slips used for fees received in cash or check are the same, the accountant has erroneously shown them in the bank account, but he has always tallied the cash at the end and those cash receipts were deposited in the bank account on the same day. So it doesn't matter whether it is shown as cash or bank. Right, whether the auditor will consider the discrepancy as material for the audit report. The auditor should disclose the fact with his comment in the audit report as it is material for giving a true and fair view of the financial statements. It is not a material discrepancy as the total receipts amount will remain the same and the fees collected in cash are deposited in bank account only. It is not a material discrepancy. You are showing cash as bank. No. The auditor should verify that whether such cash receipts reflect in bank statement on the same day and the cash ledger reconciles with the cash book on the respective dates or not. If it is followed, that auditor can include the matter in an observation paragraph with his comments, else disclose the matter as a major internal control lapse. Auditor can ask the management to give a representation. No. Right, disclose the fact with his comment in the audit report that is it a matter affecting true and fair view. Who are you over here? What have they said? What will the auditor? Discrepancy. Appointed the internal auditor. So you are not concerned with the true and fair view. Right, so the option left is C. Okay. Next one, right? 16. BVM and Associates is an audit firm that employs large number of audit assistants. CA Mahesh, a partner, pays extreme attention to briefing the audit assistants every day while the audit is continuing. All audit assistants are required to document their notes in the daily briefing and accordingly conduct the audit. CA Mahesh had made it very clear that any assistant who does not document the notes taken and the steps taken accordingly will be reprimanded. Warning, as it will mean that the assistants are not creating their audit programs on the job. The practice deployed by CA Mahesh can be termed as, so he's telling you should make notes every day, and if you don't do it, it will be like you've not created an audit program. Unacceptable, as CA Mahesh, being the auditor, should be providing the audit program, and he cannot expect the team to take daily notes instead of performing the audit. First part is right, not right by not giving them a program, but they have to take the notes. Okay, appropriate and in line with SA 230, as the audit program must be prepared on the basis of documentation of briefing notes. No, program is not prepared on the basis of briefing notes, it's prepared on the basis of KOC. Acceptable but incomplete, as CA Mahesh has not given any audit program to the audit assistants to follow. Right, so that seems right. Inappropriate, as Mahesh should not only provide the audit program but also make sure that audit program is formally approved by all the partners of the firm. Filler. Right, so what is the correct option over here? C. Next one. KJA Limited is in the business of consultancy services. The business of the company has been growing significantly, and considering the nature of the business, it becomes subject to various laws and regulations. Compliances have also increased because of this, and management has found this very difficult to keep in pace with the changing regulatory requirement. The statutory auditors of the company, Shilpa and Associates, have considered compliance with laws and regulations as a significant risk for the purpose of the audit. So compliance with law regulation, SA 250, and significant risk means SA 315, no, which requires RMM, which requires special audit consideration. And then your case study writing practice happens when you read so much. And in the exam also, something to write in the theory, you can get content from the MCQ question, from the MCQ. Right. Auditor had an audit planning meeting with the management, and management has understood that it will be their responsibility, including TCWG, to ensure that the company's operations are fully compliant with the provisions of various laws and regulations. This may also have an impact on the reported amounts and disclosures in the financial statements of the company. Management is planning to ensure full compliance and may implement policies, procedures wherever required to assist in the prevention and detection of non-compliance with law regulation. Please suggest among the following which one will not be a policy to be implemented to assist in the prevention and detection of non-compliance with law regulation in accordance with 250. Right? Whose responsibility to comply with law regulation? Management's responsibility. So what steps should be taken by the management to ensure compliance with law regulation? Maintaining a register of significant transactions of the company with comparison to particular industry and a record of complaints. Okay. Monitoring legal requirement and ensuring that operating procedures are designed to meet these requirements. Legal requirement, right? There should be a policy procedure for the same. Right? What does it say? Will not be a policy procedure to be implemented. So second one, will be a policy procedure implemented. Developing and publicizing and following a code of conduct. So telling all the employees how to comply with the law regulation. Instituting and operating appropriate system of internal control, because it has to be imbibed in your internal control system, the compliance with law regulation, right? So the correct option over here is A. If we see in the text of 250, it says maintaining a register of significant laws. What they have done, they have manipulated this part, right? And that is why this policy procedure need not be followed. That is why A is the correct answer. Next one. Right, you are a manager in the audit department of Narang and Company, and you are dealing with several ethical and professional matters raised at recent management meetings, all of which relate to audit clients of your firm. One of your client, Burnwood Company, has a year ending 2018. During the year, the company established a pension plan for its employees, and this year end, the company will be recognizing for the first time a pension deficit on the balance sheet in accordance with Ind AS 19 employee benefits. The finance director of Burnwood Company has contacted the audit engagement partner asking if your firm can provide actuarial valuation service in respect of the amount recognized. Immediately, Antina tells Section 144 auditor not to render certain services, right? Actuarial services, management services, right? We say no, investment banking services, investment advisory services. Which of the following option needs to be considered by the audit engagement partner? So can the statutory auditor do actuarial valuation service? The issue is whether there is a self-review threat, as the valuation of the amount recognized would be recorded in the financial statements. The audit partner should decline the work of the valuation service, seems to be the correct one. The issue is whether the audit firm would be likely to possess the requisite competence. Oh my God, competence is later. We can't do that work. The audit partner should decline since not professionally qualified to provide valuation service. Narang and company needs to assess the materiality of the figure and the degree of subjectivity involved. If it considers safeguards like using separate personnel, second partner review, reduce the threat to an acceptable level, independent self-review threat, then it can go ahead with both the audit and valuation. Absolutely no. Right. The audit partner could go ahead with the valuation service and disclose the fact in the audit report about the service. No. No putting in report. Right. Yes. Coming to question number 19. Right. So which is the correct option over here? A. Right. The audit partner would decline the work of the valuation service. Okay. Next one. You are an audit senior at Ghesas and Company and are currently performing the final audit of Bingham Company for 2018. The company is a manufacturer and retailer of table lamps. The current audit senior is ill and you have been asked to complete the audit of payroll in their absence. On arrival at the head office of Bingham Company, you determine the following data from a review of the current and prior year audit file. Company had 350 employees. On 1st April, 10% staff was redundant. On 1st June, all remaining received 5% pay rise and fixed bonus of 8,000 during the year. I think we've seen similar question in the previous video also, the series 2. Right. The following audit evidence has been gathered relating to the accuracy of wages and salaries for Bingham. Proof and total calculation performed by an audit team member. Written representation from the directors of Bingham confirming the accuracy of wages and salary. Verbal confirmation from the finance director of Bingham confirming the accuracy of wages and salary. Recalculation of the gross and net pay for a sample of employees by an internal audit team member of Bingham. What is the order of the reliability of the evidence? Starting with the most reliable evidence first. Right, so done by an internal audit team member, right? So obviously directly done by the auditor, right? So that is going to be more reliable. Recalculation done by internal audit team member, no, 4 cannot be the most reliable, right? So 1, and now within 1, next would be 2 or next would be 4. Alright, so proof and total calculation performed by an audit team member, then recalculation, that is 4, and then after that written and then oral, right? So that is why 1, 4, 2, 3. Right, so the correct option here is going to be B, right? 1, 4, 2, 3, right? And the last one, you are an audit senior of Pensy Accountants and are currently conducting the audit of Stalwart for 2018. Below is the extract from the list of supplier statements held by the company and the payable ledger balance at the same date, along with some commentary on the noted differences. Supplier statement balance and payable ledger balance. First one, the difference is due to which is under dispute due to faulty goods, right? 20,000. The difference in the balance is due to the supplier statement showing an invoice dated 27 March for 70,000, but which was not recorded until after the year end. The payable clerk has advised the audit team that the invoice was not received till 3rd April. The audit manager has asked you to review the full list of trade payable and select balances on which supplier statement reconciliation will be performed. On which ones will you do the supplier statement reconciliation? Which of the following statement is correct in respect of including or excluding from your sample? Right. So exclude the material balances at the year end. Is this correct? Exclude material balance as the year end? No, incorrect. Exclude suppliers which have high volume? Incorrect. You have to include them. You cannot exclude them. Include major suppliers with nil balance at suppliers with nil balance at the year end. So even though if there is nil balance, you will include those suppliers. Is that correct? Right. And the last one, include suppliers where the statement agrees to the ledger. So where it agrees, there you need not prepare a reconciliation, right? So that is incorrect. So which is the correct one? C. Which of the following statement is correct? Include major appliances with the nil balances at the year end. Right, so we've completed our discussion for the MCQs in the MTP. Right, the mock test is the mock test series for the May 19, right, the series 1. Right, thank you.